Welcome back to Reuters television. The Bank of Japan has just wound up its policy meeting, and let's get the very latest from our correspondent Deborah Collis in Tokyo. Deborah?
Monetary policy remains unchanged, but there is clearly a split now between the Monetary Policy Board members of Japan. Instead of the usual unanimous vote on monetary policy, the statement this time reads that by majority vote only, the Policy Board has decided to leave monetary policy unchanged for Japan. So no initial change there for monetary policy for Japan at the fourth Policy Board meeting under the BOJ's new independent format. However, the meeting did last an extremely long 8.5 hours. The 9-member board met for 8.5 hours with a short break for lunch, starting at 9 a.m. this morning, Japan time. 8.5 hours is the longest meeting that we have had so far for the new policy board. So there is no change in monetary policy for Japan at today's regular policy board meeting, but the statement does say that this decision was made only by a majority vote. There are 9 members on the board. The majority agreed to leave monetary policy unchanged. Now, the monetary policy meeting looks at 3 key areas in Japan, not only the most well-known official discount rate for Japan, they also look to discuss if there needs to be any change in the overnight core rate or also in reserve requirements for Japan, the rate used to control the amount of money that financial institutions must leave at the central bank accounts without accruing interest. Now, while we think there are now many on the board which are expected to favor a cut in rates or a guiding lower of Japan's interest rates in the face of deflationary fears, we also, of course, if you remember, had that extremely weak first quarter growth data for Japan out earlier today in Tokyo. The release there showing a quarter-on-quarter fall in GDP of 1.3%, much higher than market expectations. Now,
Is there any word, Deborah, is there any word in the statement about the yen?
No, these are extremely short statements. They are literally just a 2-liner, and it mentions that they had the regular policy board meeting today on monetary policy, and that by majority vote the policy board decided to leave monetary policy unchanged. But we can see that there is a considerable amount of disagreement in the policy board. Of course, things in Japan take a while to come through, but although we've had some recent comments this week from one of the board members, the most recent comments, a board member by the name of Yasuo Goto, he mentioned on Tuesday that the central bank cannot really consider hiking rates. That's not an option despite yen weakness. This was mentioned earlier this week. But
Deborah, thanks very much for that report. We thank you very much. Well, the yen has taken another hammering, meanwhile, in European trade. Just how far the Japanese currency can fall is now the subject of heated speculation. Sellers have been out in force following the release of GDP numbers. They showed a first quarter fall of 1.3%, tipping Japan technically into recession. Earlier, the U.S. Treasury Secretary Robert Rubin had set the tone of gloom. He said the yen could only be revived by restoring Japan's domestic economic health. Markets have taken that to mean we can forget about joint intervention. Well, earlier, our correspondent Deborah Collis sent this report on how his comments were received.
A day after U.S. Treasury Secretary Robert Rubin said forex levels should reflect fundamentals, officials here insist it's Japan's fundamentals which are being misunderstood. Prime Minister Hashimoto told reporters the yen at 144 is excessively weak, and he quipped that the U.S. comments reflected a lack of interest in discussing its own current account deficit. Finance Minister Hikaru Matsunaga hinted that Japan's hand could soon be forced again to intervene to support the yen.
At any rate, the kind of excessive yen weakness that we're seeing at the moment has a range of negative side effects. And we remain very concerned and are watching the markets closely.
Other senior LDP officials were ready to admit that reducing banks' bad debt is the key now.
What we have to do is move ahead quickly with bad loan write-offs and restore confidence in the financial system. That's the challenge at hand. If that can be done, then prospects should improve for the broader economy as well.
The government is expected to call a special parliamentary session in July to discuss a swift resolution of the bank's bad loans. But none of this yet instills the sense of urgency which has characterized Japan's response to overseas pressure in the past, nor is it expected to arrest any further short-term attack on the yen, whatever that might mean for the region and the rest of the world. Deborah Collis, Reuters, Tokyo.